VUG and QQQM are two growth ETFs that you might be considering for your portfolio. Both are tech heavy, both are popular funds, both have been winning in the market. But let's dig deeper beyond the surface to see how they handle volatility and the other differences between these two funds. Growth investing is not going to go in a straight line. We've seen a lot of volatility when it comes to tech as well as AI, which may test your patience and question your choices when it comes to certain investments that you're holding. I am Lisa J. Stocks. Make sure to like, subscribe, hit that notification bell, and let's get into a deeper look at these two funds to see which is the best fit for you. Okay, so we're looking at VUG, which is the Vanguard Growth ETF, and QQQM, which is Invesco's NASDAQ 100 ETF. We'll be getting to what each ETF tracks, the sector exposure, the concentration of the top holdings, performance, volatility, and which one will best suit your portfolio. Starting with VUG, it tracks the CRSP U.S. Large Cap Growth Index. That means that it focuses on large U.S. companies showing strong revenue, earnings growth, and profitability. They have a rules-based method as to what gets added into this fund, but right now, tech is dominating it. It has an expense ratio of 0.03%, which is very low. And now back over to QQQM. It tracks the NASDAQ 100, excluding financial companies. This is a pure innovation index. Companies driving technology, AI, software, and consumer platforms. It has an expense ratio of 0.15%, higher, but still within a reasonable range, and cheaper than QQQ, which tracks the same index and has an expense ratio of 0.20%. So VUG screens for growth while QQQM concentrates into those innovation companies. Both funds are tech heavy. When it comes to VUG, it holds 151 different companies with about 66% exposure to technology, 16% consumer discretionary, and 7% industrials, and about 5% healthcare, to touch on the largest sectors that you're getting exposure to. Financials is at a little over 2%, an area where you won't get any exposure to in QQQM. And when it comes to QQQM, we're getting almost 62% technology, 20% consumer discretionary, 4% healthcare, and like I said, no financials, but both are tech heavy. QQQM is more concentrated though. VUG is giving you a bit of a broader diversification. When it comes to the top holdings, they both start off with the same three: NVIDIA, Apple, and Microsoft, before we start to see a few differences in the weighting as far as Google, Amazon, Meta, and a few other mega cap companies. These are where we're starting to see differences that you can consider in finding the right fit for your portfolio. When it comes to VUG, those top holdings make up about 64% of the fund, while QQQM has a broader spread and has those top holdings at about 48%, less dominance given to those top names. VUG is leaning into those mega cap company winners right now a bit harder, while QQQM is spreading the exposure across more of those companies thriving when it comes to innovation. Now, taking a look at the performance over the last 5 years, QQQM is up about 86%, while VUG is up 77%. So QQQM has slightly edged out VUG, especially when tech is really leading. So VUG's been up about 13 to 14% annually, while QQQM has been up about 14 to 15% annually. So looking at the 3-year performance, QQQM is also slightly higher at about 105% versus VUG at 95%, both being led by those same thriving companies, but QQQM might fall faster, recover faster, and be a more volatile investment, making you feel more emotional with the way that it moves, while VUG could be slightly less volatile, a bit more smoother, and easier to hold for long-term investors. So VUG, the one with the lower expense ratio at 0.03%, strong performance in comparison to QQQM, has a similar dividend yield, 0.44% versus 0.51% for QQQM, could be a good growth choice if you want slightly lower volatility, a true foundational ETF giving you more exposure to different sectors, a way to build steady long-term wealth when it comes to your portfolio. While QQQM, with that higher expense ratio, higher performance, but not by that much, is a way to get exposure to long-term innovation. Bigger swings, but a slightly higher reward. That could pair well with your core ETF, a way to bring an even more concentrated growth ETF into your portfolio. And when it comes to investing, I never let the share price influence me because I'm usually dollar cost averaging, investing whatever amount that I have. But when it comes to these two funds, QQQM is currently about $248, while VUG is $458. So when it comes to these two funds, in my opinion, VUG is more of a foundational long-term growth ETF that you can incorporate into your portfolio. A low expense ratio, more concentrated than VOO, and a higher performance, while QQQM is a way to accelerate your growth even more. It's just a matter of deciding what fits into your long-term strategy. Is that higher expense ratio worth the performance that we're seeing in this fund over the long term? Into VUG, which has a smoother performance and might be a little bit easier on your mind when we're really having a lot of volatility in the stock market. But I'd encourage you to just choose one because both of these funds are heavily weighted into the same companies. You're getting 62% overlap between these two funds. And yes, QQQM is slightly higher when it comes to performance, but VUG gives you the lowest fees and broader amount of stocks. So just one could be paired with other funds that you already hold in your portfolio that are not heavily weighted into those same top 3 companies. When it comes to my portfolio, this is an area that I am definitely focused on right now, adding more growth-orientated investments into my portfolio. Whichever you choose, you have to remember that it's all about staying invested and giving your investment the time to grow. So let me know in the comments, are you holding VUG, QQQM, or another fund? I hope you enjoyed this video. Make sure to like, subscribe, hit that notification bell, leave me some comments. Let me know how you're going about finding the right balance for you between stocks and funds in your portfolio. Thanks for watching. Okay, bye.